Going over the simple math and seeing what just a $100,000 initial investment into an ultra powerful dividend ETF like VYM, the Vanguard High Dividend Yield ETF, is honestly enough to shock you. And this is because a lot of us were sort of taught or told that a $100,000 investment into something would never be enough to retire off of later on. But going over the math and looking into the numbers, at least historically speaking, that is just 100% not the case. Now in this video, we're going to go over one of my favorite dividend growth style ETFs, maybe one of the best ones across the entire stock market. And this is of course ticker symbol VYM, the Vanguard High Dividend Yield ETF. I'm going to share with you guys what this ETF is, how it works, and why it's so popular. Then later on, I'm going to share with you the exact numbers and show you firsthand how just a $100,000 investment into something like VYM could potentially be the master plan for retirement later on and can definitely set you free, at least financially. So if you're a long-term investor focused on dividends and dividend growth, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So first things first, talking about VYM, understanding what this ETF is and how it works, it says the product summary right here. Seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment returns of common stocks of companies characterized by high dividend yields. Now, this ETF provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields and allows you access and exposure to all the hundreds of different stocks within this ETF for just 0.06% of an expense ratio, which is very, very cheap. Now, VYM's performance over basically any time frame has been very, very impressive. Year to date, the ETF is up around 17%, 1 year over 30%, the last 3 years around 9%, 10.78% over the last 5 years, the last 10 years around 10%, and then since inception around 8 or 9%. So basically, whenever investors bought into VYM, more or less historically, they're up substantially on their initial investment. Now, I said earlier that VYM offers very cheap and easy exposure to hundreds of different dividend-paying stocks, and I was not kidding when I said that, considering there's over 530 individual stocks within this one single ETF. Now, this is exactly why I personally think that something like VYM is perfect, especially if you're sort of in the early stages of building out your portfolio. You don't really know what to buy into. You're doing some single stock research, but everything seems a little bit confusing and overwhelming. Well, by buying into something like VYM, which not only has a long-term track record of performance, but also with a single click of the button, you're getting 537 stocks within one ETF. And what's also awesome about ETFs, this is another reason why I always tell investors, especially newer ones, to focus on ETFs, because with a single share of VYM, for example, you're not getting exposure to just one sector, you're getting exposure to basic materials, consumer discretionary, consumer staples, etc., etc. But another thing I want to make very clear here is that if you as an investor personally don't want or do want more exposure to certain sectors, there's basically an ETF out there for you. Whether, let's say, for example, you want way more exposure to technology because you believe in technology long term, well, VYM is only going to give you around 10% exposure, so maybe VYM isn't perfect for you. But on the other hand, if you want a little bit exposure into a lot of different sectors, and if you do want to be extremely diversified, well, VYM is definitely an ETF to look into. Now, for me personally, I love diversification. As I'm getting older, I don't want to sit around and worry about a single sector or a single name really having a bad year, etc. So by buying into ETFs like VYM or even others, even if industrials, let's say, for example, has a very bad quarter, let's say there's some macroeconomic thing going on, well, because industrials is only 12% of the ETF, you're probably going to do just fine regardless. Another thing to realize about VYM is the top 10 holdings. Although there's hundreds of different stocks in this ETF, it is pretty concentrated on these top 10, which are names like Broadcom, JP Morgan, ExxonMobil, Procter & Gamble, the Home Depot, we have Johnson & Johnson, Walmart, AbbVie, Merck, and Coca-Cola. Now, a lot of these names are sort of boring, tried and true names that have been trading for years now and that have done pretty well historically. Not only that, all these names paid dividends and also have paid more dividends over time, which means your initial amount of cash flow will probably grow over time if you invest into this ETF as of today. Now, another cool thing about VYM and a lot of these other dividend growth style ETFs, even though these ETFs are of course dividend income focused to a degree, I mean, they literally have dividend inside the name of them. A lot of these ETFs have grown a lot over time, and I'm talking about capital appreciation or just pure growth on the chart. Now, on the max time frame, VYM is up 162+%. This is not even including the dividends, and VYM does offer a pretty decent dividend. So this means that buying into VYM, you're getting exposure, very cheap exposure to hundreds of different stocks. You're buying into an ETF that at least historically just keeps growing over time, and you're also going to get paid dividends every single quarter. Sounds pretty good so far, doesn't it? Now, the dividend yield for VYM is around 2.74%, and this is over the last 12 or so months. Now, this is not bad whatsoever, considering again, you're getting so much exposure to growth, and with almost a 3% starting yield, no one's complaining about that. On the longer time frame, looking at the dividend growth, anywhere from around 5, 6, 7%, which once again also is not bad whatsoever. Now, what this means, like I mentioned earlier, is that even if you buy VYM today and you're getting a set amount of dividend income, over time they have paid more and more to investors every single year, at least for the most part. So this means that over time, if you hold onto this ETF long term, you're not only going to have your investment grow, but you're also going to get showered with cash flow and more of it over the years. But it's time to get down to business, and I told you guys that just a $100,000 initial investment into something like VYM could potentially be the master plan cheat code to not only retire, but retire with a boatload of money later on. So with a $100,000 initial principal, a $1 contribution on top of that. So this is saying that you invest $100K into VYM and you basically never invest anything else from here on out. A 2.74% initial annual dividend yield, a 7% expected annual dividend amount increase, which again can go up or down, who knows, 7% annual share price appreciation, 30 years invested, dividends are going to be reinvested along the way. Let's go ahead and see what we get. So year number one, the initial $100,000 investment would pay you around $2,700 more or less per year in dividends. And once those dividends are reinvested and once VYM raises their dividend year over year and goes up in price, you're talking about $109,000 already. Now, after just 9 or so years, your $100,000 principal would have already doubled up to $204,000 and over $5,600 per year in dividends. Now, 15 years down the road with that $100,000 investment and just a single extra dollar every single year, a $350,000 portfolio will be made with almost $10,000 per year in dividends. Now, 20 years down the road, we're talking $546,000 of principal and around $15,000 per year in dividends. Now, again, the idea of retiring off of $200,000, $500,000, or $1 million plus, it's all going to depend on your expenses, etc. But just going off these numbers, I'm just trying to share with you guys how a portfolio can compound to a massive portfolio with just an initial, relatively small amount of money invested. Now, I'm not saying that $100,000 is a small amount of money, but I'm saying that if that's all you ever invested your entire life and let it grow, that 100K could turn into over $1.4 million later on after 30 years of investing. Now, obviously, if we added more contribution on a yearly basis, or if VYM raises their dividend a little bit faster, or maybe you even buy VYM when it's much cheaper and your initial annual dividend yield could be higher, all these numbers could change dramatically. And that's why I always say on my videos to take everything with a grain of salt. I'm just simply trying to show, especially newer investors, the power of compound interest and the snowball effect of building out a high quality dividend growth portfolio, which is one single ETF, and see what that turns into long term. So now that we went through and I shared with you guys what VYM is, the Vanguard High Dividend Yield ETF, and I shared with you guys why it's so popular and why so many investors think so highly about this ETF to begin with. I also shared with you the exact math on how a $100,000 investment could potentially turn into well over $1 million later on with just a single dollar invested after that. I lastly, most importantly, want to hear from you guys down below when it comes to dividend growth investing. If there is a certain ETF that you buy consistently, which one is it? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.